Hi everyone, K Kim here from Traders Club. Thank you very much for tuning in today. Today I thought I want to do some video analysis instead of writing a blog about it because I have a lot to cover, and if I'm gonna put this into words, it's gonna take 6, 7, 8, 10 pages, and I didn't want to do that. So, and since I opened my blog, I haven't done any video analysis. So today I thought maybe I'll have some fun with it, and so I got a lot to cover, so I don't want to chit chat too much, but let's get into it right away here. But first I just want to thank you very much for following me on Twitter and following the blog and commenting and emails and all of that. And you know what, I wish that with my analysis today you could able to be cautious about the market that is about to happen, because I really believe what's going to happen is that something's going to happen here. I mean, obviously something always happens in the stock market, but what I'm trying to say is that we have been in this strong bullish trend, and there are many reasons to believe that it could continue, but through my analysis I have found out that maybe we are looking at some steep decline is on its way, okay? And again, its hardest thing in trading is to pick bottoms or pick tops, you know what I'm saying? And we all do it though. I mean, we all have done it. We all trying to pick bottom and trying to get in early, trying to get in a good position, and we get burned or we get stopped out. Same thing. We trying to pick tops or whatever. So that's not what I'm trying to do here, but what I'm trying to do is that I want to warn you and help you to be cautious next week or two, because I believe that steep decline is on its way, and I don't think it's going to be a small retracement. It could be a sizable decline. It could even have overall market index rollover again, as the data that has been given to us by since last Friday. We can't confirm that, but with the indicators and analysis and chart patterns that I'm looking at, there is signs are flaring. There are warning signals popping out everywhere. So that's what I'm trying to get into. So let's get into it right away and see what we can find here. Again, I got a lot to cover today, so I don't want to go too. I like to explain everything, but I want to just really show you just little highlights of things. Right now we're looking at Dow Jones Industrial Average ETF. What I really want to quickly show you is the Dow Jones Industrial Average. These indexes, they don't like to go sideways, okay? They're not like stocks. Stocks could go sideways and then boom, they just pop up, you know what I'm saying? But the indexes, they don't like to do that. You can see that we're moving sideways here. Okay, you can see that we moved sideways a little bit here before it, it came down, it came back up. That retracement or that resistance was never broken. So then what happened? It tanked. Okay, I'm not saying that's what's gonna happen. I'm just saying that Dow Jones don't like to go sideways. And let me just prove my points a little bit more here. Don't like to go sideways, okay? It just do not like to go sideways. Go down, go up, never broke that resistance, boom, okay? And if we just go further, don't like to go sideways. It's just they don't. And what it likes to do really is up and down, up, down, up, down, up, down, up. That's what it likes to do. It does not like to go sideways. I mean, this was double top, but sideways movement, if you want to call it, boom. Sideways, boom. Even when it consolidates, it likes to kind of do this or something like that to continue its move. But I just want to point that out, that it does not like to go sideways. So this is cautionary signal that we're seeing here. I mean, you could say that, hey, this actually doesn't look like going sideways because it's actually making higher highs. Yeah, maybe, but we go to 65 minutes here. Clearly, we are making channels. So, and again, it's early to tell, but cautionary signals, okay? Also, what I want to see, what I want to show you is that there's cycles of these trends, okay? They don't just go forever. They don't just continue move higher and higher and higher, and that doesn't mean that it can't happen, because anything could happen in a stock market. But as a trader, what do? We don't you know, we don't work off guesses and trying to win a jackpot. What we do is we're trying to work off of probabilities. Okay, so there are cycles that these markets go, you know what I mean? And that cycle that I found is that it's about 2-3 months, you know, maybe 4 months, but that's kind of technically 3 months is kind of the magic number that has been working for Dow Jones last year or so. So, you know, let me just prove that point. This right here, that has been 3 months. Right over here, it's been about 3 months. Right over here, a little over 3 months. That's probably about 3 months, 4 months or so. So that's kind of the cycles that it goes through. Doesn't mean that it has to roll over. Doesn't mean anything. Okay, it just means there's a probability that it could cycle again. But you know what? It doesn't have to. But you wanna bet on that it's gonna, you know, that it's gonna continue going. You just start getting in a lot of, you know, equities right now. No. What I would do, be cautious and just to be frank with you guys, that I closed all my bullish positions last week just because I realized there's some slowdown coming. Anyway, let's actually look at weekly chart here on Dow Jones ETF. What we're looking at is we're getting very close to this all-time high resistance, and we are forming some kind of rising wedge. Okay, and many technical analysis say that this is actually bearish formation. What they saying basically is, you know, the range is getting tighter and tighter, and then sooner or later they will do this. But I don't want to assume that. I want to trade in a way that it breaks out. But you know, they say it's about 65% that it breaks it below. Could be. I don't know right now. As of now, if we look at the candles, come back here. Okay, look at the candles here. Nothing much. You know, these candles doesn't tell me anything. It doesn't have any reversal signal. Again, this is a weekly chart, so this 2 weeks doesn't. It just moves sideways. Okay, like that's also my point, is it doesn't like to move sideways, but it did move sideways. You know, Dow theory, the trend is assumed in effect until it gives us definite signal of reversal. And do we have any definite signal of reversal? No, we do not. So then what do we have to do? We have to assume that trend is in effect. And this doesn't mean that, well, if you assume trend is in effect, let's continue to buy calls and continue to go long. No, that's not what it means. It means our mindset is that trend is assumed in effects. Our mindset is that we don't go heavy on short, and we are either closing out our bullish positions or going lower with our bullish positions. But even on weekly chart, guys, don't like sideways movement. You just don't like sideways movement. You don't like sideways movement. These indexes, man, they like to go up, go down, go up, go down, go up. They do not like to go sideways. It's just don't like sideways. I don't know. They're not like stocks, because stocks like to they like to consolidate and then they move higher. That's kind of the thing about the stocks. But I don't know, these indexes, they don't. They move sideways. There's always sizable pullback. I mean, these are weekly chart, so I mean, can you imagine this month and a half just bearish and as bear attack? You know what I mean? So, and that's Dow Jones. Quickly, let's go to SPY. I want to look at daily first, because on SPY we broke out of the sideways movement. So that gives us sentiment of bullishness. We do have low volume, which is a concern. So we kind of have to have another confirmation of follow through next week. But SPY does look more bullish than any other indexes that we're going to be looking at today. So again, you know, the 10 EMAs continue to soar here. You know, if you want to short SPY, at least wait for confirmation of a break below 10 EMA. What we want to see is strong dark candle. It doesn't have to be marbles like that, but strong dark candle that piercing through it with high volume, some volume spike, you know. But until then, we assume trend is in effect, and especially SPY, we closed recent resistance above that. So this one is very bullish. Okay, it's very bullish. So let's, again, the cycles are pretty much the same here on SPY. It's about 3 months here, it's about 3 months here, it's about, you know, less than 4 months here. You know, this is about 4 months or so. So again, there are cycles that it goes through, and so that we have to keep that in mind. Let's go to weekly. Here we're finding, where's my thing? We're finding resistance here. Okay, again, this is a weekly chart. There's a little bit of space here, so you could maybe 1 week or so, maybe half week, could kind of get up there and, you know, find some resistance there and maybe struggle. But what we're looking at right now is this rising wedge, which is a double confirmation right here. That is very strong resistance. I mean, in technical analysis, double confirmation, triple confirmation is always the best thing. Okay, every time when that happens, you can count that level, that price level is gonna be acting as very strong resistance, because we have this rising wedge, you know, rising wedge resistance going on here, and same with that this peak over here from 2007 November, which caused this stock to fall very dramatically. I mean, this was actually the crash. So does it mean that it's gonna roll over again? I have to continue to remind, it doesn't mean that you start going short. It means you start to pay attention, start to be cautious. I mean, okay, let me use this analogy. Okay, how many times? 1, 2. You know, I'm gonna call it a 3. I mean, again, in technical, there's nothing perfect. There's nothing textbook isn't gonna happen. Okay, it's never gonna just line perfectly for you to see it and for you to just time it perfectly. These technical analysis, it has that overall, you know what I'm saying, now overall the ideas, but they don't always work perfectly. I mean, it didn't hit it, doesn't work perfectly, but I'm gonna call it as resistance area because it was in that vicinity, and in that vicinity bears came and attacked this thing. Okay, so 1, 2, 3, 4, 5. So last 5 times it hit that or went close to that resistance level, the rising wedge resistance level, and it tanked. Okay, I mean, this is a weekly chart, so I think I'm safe to say it tanked. All right, so let me ask you, let's say if you went outside today 1, 2, 5 times, and every time you went outside you got beat up. So on a 6th time you have to go to the store and buy cereal. How would you feel? Because, you know, you already went outside 5 times, and every time you went outside you got beat up. There will be there's some fear. You would be hesitant, reluctant to go outside because, hey, maybe, man, I'm gonna get out there, I'm gonna maybe get beat up, I need to get my gun or something. You know what I'm saying? So right now, that's what's happening in the market. Is there a chance that you go outside and you be okay? Yeah. But what are the probabilities of that? Again, we don't work with guesses and feelings. We work with, as a technical analysis, technical trader, we do not work with guesses, but we work with probabilities. So then last 5 times when it was in that vicinity, it you know what I'm saying, it rolled over. So what could happen? Okay, we don't use words either like it should happen, it's due for a pullback, or it's due for a bounce. Because when people use words like due for something or should something, because then you trade, start to trade in that mindset, or the fixed mindset, which means that, well, it should do it, and it's a due for it, so I'm just gonna start shorting. No. You know what I mean? So we start talking in a language of it could. There is possibility, there's high probabilities, because then it eliminates of your certainty, because nothing is certain. So then we always kind of work in these uncertainty with levels of chances and probability. You guys understand what I'm saying? Okay, I'm trying to kind of go fast here because, man, I got a lot to cover, but that's SPY. Okay, so watch this level. This is a weekly chart, so who knows how long it's going to take before it starts to retrace. Let's go to QQQ. QQQ is weak. Is the weakest index out of 3. However, we maybe found some strength on a daily chart here. I mean, we got some gap here. Possibly we're breaking out of this just ugly looking channel here. I mean, how long has that been? Like a month, did nothing, you know, and then we finally look like we cleared this resistance here. So it does look like maybe something going here, but what I wanna to do is that I want to look at what's troubling is we've all been looking at it. We've all been looking at it. Everybody's been talking about it, and you know, people say weird things too, like, hey, everybody's been talking about it, so it's not gonna happen. Like, really? Is that what you think? I'm sorry. Well, I don't know why I'm being so sarcastic today. Anyway, you know, Apple, okay, I'm sorry, but Apple daily, like Head and Shoulders, everybody was talking about it. Everybody thought it's not gonna happen because I don't know, somebody said, well, Head and Shoulders doesn't work on Apple, and well, you know, it did work. Anyway, we got that. Again, we work with probabilities, guys. So does this mean that, well, it's gonna go down to this 38.3 retracement? No, we don't use that language. It doesn't mean that. It could, however, that could happen. Okay, and what happens is, here's the thing about Head and Shoulders. If this Head and Shoulders, this is weekly, so this is like from 2009 right here, this whole move. This weekly here, what if it formed like here after moving like this? What does that mean? I'll just tell you what it means. It means nothing. Okay, and that's what you have to understand. Just because it forms certain pattern doesn't mean it's going to play out. The location is everything. Technical analysis. If you guys are, what is that? You guys are selling houses. You're a realtor. You guys all know the location, and same thing is true on technical analysis. Head and Shoulders forming like in this vicinity, it doesn't mean anything. It's not. It could still kind of, you know, roll over or whatever, but that's not because because of Head and Shoulders. Head and Shoulders, however, it means a lot after a long rally, after years of rally, and it happens at the top of its bullish run. Again, it might not happen. It could just go boom, boom, boom. You know what I'm saying? However, chances are high that it could play out. Because also I have other indicators to show you that it could. But right now, just looking at the chart, this looks like if this pans out, it could get ugly fast. Okay, and this is neckline. Once it's breached, is probably heading towards 53 area. Okay, and that level is very, very important because you see this thing going here. You know what that is? That's 200 SMA on a weekly chart. That is coinciding, in syncing, and residing with 38.2% retracement zone. So what is that? That's a double confirmation. Again, double, triple confirmations are always a good thing in technical analysis. And I'll give you another confirmation, which is projected target. So this measuring that, it comes exactly to 53 level. So how many confirmation did we get? We got one confirmation of 38.3 retracement. When it does come down, and this is where likely it's going to come, 200 SMA residing here. I mean, and we have Head and Shoulder. If it rolls over and gets confirmed, the projected target is at this. We got 3 triple confirmation. 53. When it does roll over, 53 is where it's going. Again, I'm sorry for using that with the certainty, but with triple confirmation, that I'm pretty confident that it could. Okay, it shouldn't. It could. It's not due for it, but it could, and there's high probabilities of that. Okay, so we cover all 3 indexes of I mean, or QQQ SPY and DIA of chart patterns and whatnot, and what could be expecting. But what I really wanted to show you, what is very troubling, is first I want to show you these bearish divergence that is in play. Let's see here. This is let's go to DIA. Okay. This is a weekly chart again. Here we had this initial back in 2007 bearish divergence on a weekly chart, and it crashed. And this doesn't mean that bearish divergence made it happen, so it crashed. No, there was signal, warning signal, cautionary signal. They said it's the chart is telling us take heed, cautious, or something happening here. Okay, and you know, bearish divergence doesn't mean that it's gonna crash. It just means that it's been pushed. That's what divergence occurred. Is that it should recycle, but it didn't recycle. It kept pushed, so it crashed. Okay, there is divergence here. It didn't crash, but it had a good size pullback, and that was good size pullback, which needed to rest, and then so it could resume its bullish trend. Okay, there here, pull back, and here, what's troubling with this is the size of this thing, the duration of this thing. This is 1 year. This is a 1 year period of time, and usually it's 3, 4 months, several months, year. So you can see that the red line is still here. The blue line is poking out of it, but once it starts roll over like this and red line follows, that's still confirmed bearish divergence. And the troubling thing about this is that every time when weekly bearish divergence is played out and confirmed, it comes down with very sizable, I don't want to call it retracement pullback because it's more like steep decline, rollover, not a crash, but rollover of this whole market. I've been looking at this, and I've been talking about this, and it's been just grinding, keep just going up and down, and just these divergences continue to play out here. You wanna be saved from this divergence. Maybe this divergence never play out. What we want to say is this thing just cannot cycle right now because of divergence sake. Okay, what it needs to do is just continue to go up, and this blue goes up and red goes up and then cycle, and in that case we have no divergence and never played out. Okay, so this is very crucial next 2 weeks, and this is Dow Jones. Let's look at SPY weekly. SPY weekly also troubling. There, boom, there, boom, there, boom, there. This is years of worth, and this one, yeah, and we're just right here. And if tomorrow or in a few weeks do this and this do this, you're gonna do that. Troubling. You know why troubling? Because last 3 times when it had confirmed bearish divergence, it tanked. That's why it's troubling. I'm going to use the analogy again. You go outside this morning, and 3 times you got beat up. 4th time, you're going to get beat up again. You know what I'm saying? It's going to it might not, but the chances of that is very, very high. So, troubling. Okay, it's troubling. QQQ. Weekly chart. You know what kind of interesting about QQQ is we don't have divergence here because it's this going up and this is also going up. Okay, only we have divergence here, here, and here. But funny thing about it is we go to NASDAQ, not QQQ, which QQQ follows the NASDAQ Composite. We got divergence here, there, and boom. Here, and boom. There, 3 peaks. This is 3 peaks divergence, and that's what we're forming right now. Okay, boom. 3 peaks. This one, very, very steep. You see the angle of that thing? It's about 1 year's worth. Okay, you look at this angle, and you look at that angle. You look at this angle, and look at that angle. Okay, you can see that, how steep that is. And so, that's troubling. And just because, also because last 3 times, it's weekly chart too, so last 3 times when it was confirmed, it tanked. The whole market tanked. And it's troubling because, you know, Dow Jones have a weekly divergence, it's about to play out. S&P have divergence, it's about to play out. And as well as NASDAQ QQQ divergence. And QQQ is very troubling because we have a weekly head and shoulders on top of that. Weekly head and shoulders on top of that, plus bearish divergence forming on MACD. Again, remember I tell you in technical analysis, double confirmation, triple confirmation, always good thing. So we have a head and shoulders, we have a weekly bearish divergence, and other things that I'm going to be showing later. Troubling, very troubling. Okay, but if you trade both ways, like myself, you buy calls and puts, it's exciting. I love riding these just huge fast decline. I mean, they move very fast. It could be just 3, 4, 5 days, boom, 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 like bearish Marbozu candles, and you know. So I'm sorry, but I kind of want to roll over, so then I can ride that, because I don't buy securities, I don't buy equities, I don't, you know what I mean. I trade options, and I trade both ways. I don't want it to always. I want it to move. I want it to move fast, and that's how I profit from swing trading, position trading. So, you know, but for long-term investors, and as far as the, you know, the health of overall market is troubling, if you guys know what I'm saying. So we did all, you know, SPY, DIA, and as well as QQQ. And the last thing I'm gonna show you, this is where you're gonna be like, okay, all right. You know, you convinced me. You know what? There's gonna be high chance that, you know, it could retrace a big time. It could pull back, sizable pullback, or steep decline, or you can use the word, it could tank. So this is gonna be my last indicator that I'm gonna be showing you, and this is a daily chart. This is Dow Jones ETF Dow here. This is DMI. This DMI indicator, what it does, it measures the strength of a trend. Okay, so these peaks, what it represents is that is peaking out. Is the strength is starting to die out. It's tired. It's pushed up too much. It needs to reset. It needs to rest. It needs to cycle back down. That's what it's saying. So this is DMI indicator, and I'm looking at Dow Jones Industrial daily chart. Okay, here, watch. You know what I want you to see here? We peaked here on DMI. What did stock do? Stock continued to go up. It needed to recycle, it didn't. And so it made lower highs. It made higher highs on stock, lower highs on DMI. What does that do? That's a bearish divergence. Okay? DMI isn't a divergence indicator. It's very weak in that, but that was bearish divergence. Sooner or later, it was it was due for it. It didn't get to it. You know what? You know what that reminds me? Have you guys watched this kind of classic movie, Final Destination? You know, once you miss, and you're supposed to die, but you didn't die. But that didn't, that didn't end it. Like it skipped you, but it always comes back. And I feel like these divergences are kind of like that. This was the peak, and that's what the DMI was showing. It said, well, you must die. Well, it didn't die. It kept going up. So then when we made lower highs and higher highs in this ETF, sooner or later it had to die, and it had a steep decline here. And after having that divergence. Anyway, let's go back with our analysis here. Analysis here every time. Okay. Every single time. Okay, and now I want you to sit back and just look at this. Every time. Every time. Oh, I forgot one here. And you know what else is troubling? You see this peak that we are on right now on Dow Jones? Oops. We haven't gotten this high. We have not gotten this high. This is all time. This means it's pushed up. It's been pushed. This market has been pushed. Like they inject stuff in your body to push your body, but when you inject something to push, it crashes sooner or later. And so very troubling, because we have other we did analysis earlier, the bearish divergence, the chart pattern, the cycles, doesn't want to move sideways, all of that. And with also that, with DMI topping out like this, okay, you be the judge. And let's go to SPY and clear that. Ooh, what happened? Now I have to clear everything. Dang it. You got the idea. I guess you get the idea, right? I mean, but I want to make my point, so it's more dramatic. You know what I mean? Here, this is divergence. Should have crashed, but it did, or should have rested. It didn't. Divergence came back later. Think. Okay. There. This is daily SPY. There. Okay. QQQ. You know what the interesting about QQQ? I'll tell you after I drew these in, so you get the idea. This is divergence here. About QQQ is, I want you to pay attention to here. This is 20 line here. It never, after this crash, is, even though the QQQ was kind of moving upwards like this, DMI never liked it. It doesn't like it. It says there's no trend, there's no strength, there's no momentum, there's nothing. That's why DMI, it never spiked up. It's just saying it's nothing. And that's what's troubling, is that basically what this is saying, that this move that we had right here, there's no strength, there's nothing, there's no movement, there's no momentum. And because we looked at weekly head and shoulders on this thing, this right shoulder seems just broken. You know, your right shoulder, you're walking, kind of limping, and your right shoulder kind of like broken. You know, that's what it feels like. We're looking at DMI, and so that's troubling. And so, you know, that concludes my analysis for today and why I am bearish. I mean, let me just get this straight. Dow theory, trend assumed in effect until give us definite signals. There's no definite signal. There are indications, okay? There are indications of market possibly rolling or at least having a steep decline, or at least a sizable pullback is coming, and that's what these indicators shows us. But when we just look at a chart itself, it does not give us any definite signals. So we assume that trend is in effect, that is going to continue to go, but we have to make sure that there are cautionary signal. Doesn't mean, I mean, you know, hardest thing about trading is you know that it's not about doing analysis. Everyone can, most people can identify different patterns. They can identify, you know, the head and shoulder, the shooting star. Hardest thing is about pulling the trigger, staying in the position, adjusting your stops, and exiting with profit when time is ready. That's the hardest part, okay? So when we look at this analysis, the hardest thing for you is going to be making a decision to, well, where do I get in? Well, when do I get out? And that's something that you have to work with your trading, depending on your trading strategy. You know, if you're a day trader, weekly, if you're a position trader, swing trader, long-term investor, value investor. So that's going to be what's hard for you. I have given you what I think the market might be doing next few weeks, but if for you, it's going to be challenged to make a decision of how you're going to react to that. So, well, thank you very much, guys, for just hanging out with me today. This has been fun Sunday afternoon, and hope to talk with you on Twitter and on my blog. And so, again, I'm gonna be, I don't know, maybe I'll do more of a weekly market update with video starting next week, or you know, already started this week. So again, thank you very much, guys. Have a great Sunday night, and I will talk to you this week. All right.